Recording is on.
All right, we're live, folks. Screen look okay? Let me just expand it out a bit. Yeah, so part of what I wanted to do today was inspired by Edgar and Chris, which is basically like the psychology part, which is the forgiveness. Why do we do the same mistakes? How do we recover quickly? Is there like shame associated with losses that you should take, which are part of your system? Um, so one of the things that I've been doing is that anytime I just been working on my inner game so I can get better at the short term game. And I was like, you know, buying and holding, you get way more volatility than you ever would if you were just thinking about risk, managing risk. Because like right before this call, my brother called me and he's like, yeah, it's looking good. I don't know what to do. I said, well, when it gets to something, just take off some. He's like, you think it's gonna get there? I don't know. And then then he goes into the whole accuracy based thing. I'm like, this happened before. I'm like, what if every time we just saw that double top, the first one fine, but the second one when it was huge and wide and you didn't take some off, it's like, come on. He watched his KDA go all the way up to $28 and all the way back. It's like he got in between like 1 and 5. So I said, if you just took profits every single time, like when Bitcoin hit that all-time high, you wouldn't be thinking about whether it's going to break out this time, because it might if it does go up that high. And he said, well, everyone I've been listening to is blah 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 saying it's going to go down and it's going to go da 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 da. I'm like, oh, they're talking about the Wyckoff. I hope they, if they're talking about these Wyckoff patterns or whatever pattern they're talking about, that they always preface it by saying, hey, this is just one scenario. Anything can happen. All you can do is risk reward. People that hate on TA, they say, oh, TA predicts nothing. It's because they're looking for 100% accurate. And that one time it didn't work, they think TA doesn't work. It's like, yeah, if you only are using TA and you have no risk management, it doesn't work. It's just a matter of time before you get wrecked. So one of the things that he and I were just talking about, it's like, yeah, let's stop this buy and hold game, and we'll get more into just allocating more into trading short term, which I'd like to do. I said, well, one of the risks, the reason I haven't is because what if they just freeze your account? I'm like, I'm nervous right now on the exchanges that I'm using. There's no KYC. I'm like, what if they just say, hey, we could rob this guy, and then da 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 da. You never know. I was on Reddit reading about something else, and then I just heard horror stories of even on Coinbase. Hey, they froze my stuff for no reason. I don't know. I haven't had any problem with it, but we'll see. So eventually what I might want to do is just do that legitimately. But just getting back to the psychology thing, it's like you can do the short-term game if you're willing to put in like a good, like, so you want to go out and hunt and get rewarded and you're okay with taking hits, and you have a system down. So it's like if you can think in probabilities, if you have if you have market reading abilities in the system down, you can think in probabilities, and you have your risk management in place, you'll be okay. But if not, maybe staking such and such. But I mean, just basic. Let's just to scroll back up. Huge wide double top. I mean, I was even thinking back my psychology. I was so caught up in the way we were getting up there, rather than just I was caught up in accuracy based thinking instead of just expectancy based thinking, which is how we should all be thinking. How much risk, how much reward. I said leave a runner when you get to the top here. If we do break the show, I mean, one of the things I said, if you want to be really risk averse, we have this head and shoulder here. They're thinking that this thing at least is going to get up to this major high volume node, this major VPOC. Like this one's only a week or so, right? So we're already like probing this and testing it. So here on this day, there was a couple sideways up calls, especially when we had this huge, after you have a huge, it's a whale candle. That's a launching point of directional conviction. It broke all this. It shifted all time frames. But it doesn't mean the next day it's going to go up. After these days, you get those tight Doji Jesus candles because it just doesn't know what to do. Look, tight Doji Jesus, even on the downside. Let's just remove this for a sec. You can see it here, tight Doji there. There might be one there. Let's see. Takes a minute. There we go. Okay. Yeah, see that tight Doji? Just a lot of uncertainty, and then all of a sudden you get some major volatility contraction because of that. It's psychological. No one wants to come into the market after a candle like that. It just nobody does. So you're not going to have a lot of movement. Volume's correlated with volatility. Same thing with this. So after we get these ebbs and flows, that's why When was it? Just there was a time when a lot of this when this was coming down, a lot of folks in this channel were seeing this congestion, saying, "What about this head and shoulder? What about this head and shoulder?" And I was maybe posting sideways up calls when it came down here. It's like, yeah, I'm going along because it's like you can't just think it's going to go here and then, a couple of days and then go here. These things take time. This took, this big move happened out of a big sideways zone, right? And that's really what launches big moves. The bigger the zone, the bigger the move we can get off of it. And you can see here that this was the dominant trend for the last, obviously the big picture has been sideways. If, this is just relative to the time I'm trading. There's infinite time frames. You can say, well, what about this? Isn't this? I'm like, yeah, the biggest one's up. But we're trying to, in the middle, we obviously know now that if we're staking, especially things like Polkadot, which I'm not going to say who, I've had the same problem with it. It takes about 28 days, right? So if you're getting greedy and you're getting whatever, and you got a big whatever, you're getting used to the dots, you're getting whatever, and you didn't take off in time. By the time it gets here, if you just were getting greedy, thinking it was going to break, and you didn't get your 30 days, you just watched it go all the way down. And that's the problem with staking. It doesn't make up for the volatility, which just was basic trading. We can make like why is it basic? Well, it's like the same principles. I talked to my brothers like, oh, well, the day trading is different. Like, no, it's not. It's not different. Like, this is a daily chart, guys. Let's just pretend this is a 15-minute chart, and the day started here. Now, this is getting more towards the end of the day. What did I always tell you on trend days? Towards the end of the day, it's usually probably going to bottom out. 90% of the time or more in a pure trend day, it ends in the last couple of hours. So it's like you see this, it's like here's a huge resistance zone, giant move off. Why wouldn't you get out there? Double top. Now that principle over a long run is going to make enough money, but eventually we know it's going to break. So it's like it doesn't mean that the principle has to hold true every single time. These are general things, and we're trying to basically create a picture. And that's the hardest part about this is creating a picture in an uncertain environment. I've had a lot of folks that friends, family, whatever, call me up. Oh, I'm surprised you didn't take any off here. And oh, yeah, here, yeah, it's a good time to buy. Yeah, it's like, well, yeah, I'm not, telling folks to buy. I was telling folks to buy back when it was around down here, when it was awful. Now I'm not telling, why would I tell people to buy here from a long-term perspective? This is very risky, right? Because we're at a potential inflection zone where we can get extreme volatility risk. That's great for traders. That's why, like, these sideways days are easy to trade because they're based on trade location. Now, if you're trading the S&P, some of the things you might look for are if we have, this type of, time frame alignment, or if it's like we're coming down into a zone and we have lower volatility overall, and generally we do, and the internals are looking whatever bearish, even though we're coming down into it. Even though the price is looking scary, but the internals aren't. The internals, other indicator. We're trying to build a picture, right, of where we want to go, and that kind of ties into the psychology where it's like you're building different scenarios, and you adjust your risk accordingly, and that's the best you can do. And you have faith in your system because over a long term, that's what's going to extract wealth out of the market. And when you make a mistake, which is inevitable because this is a constant growing process. The most important thing is if you're having constant proof, are you getting better than where you were a year ago, 2 years ago? And if you see those types of gains, then you're on the right track. But it doesn't mean you're not going to make mistakes along the way. So it's like, I think it was a day when, I can't remember what day it was. Somebody missed something and they said, oh, should I forgive myself? I said, yeah, of course. You didn't chase a trade. And that's the price you pay for being disciplined. It's like, okay, you missed it. It's like, it's not the end of the world. And a few folks went short when there was a sideways up call. I could have easily been wrong there. And I was like, well, that one, I felt like at that point that was a little bit more obvious. I forget which day that was. Because, after you have a huge move like this, the time frame alignment shifts. Even during the day, I knew the time frame alignment shift. Once it broke this on this type of volatility, everything shifts. And basically every support zone is, you basically what happens is your bias becomes bullish after this. Every support zone is having good odds of a tradable reaction. Now you see on this day, after a huge volatility day, there's the expansion, action, reaction, expansion, contraction principle. You would expect a tight doji day. So if I tell you to say, okay, take the first resistance zone, you're not thinking I'm going to hold this to break it out. You're literally saying, okay, on this day, I'm going to take zone fades for tradable reactions, which have basically an absolute criteria of, like, you want to take 2R and like certain conditions, like after a huge move, you expect volatility contraction. You're not expecting a breakout. You're going in and out at the highs because you're expecting sideways environment. And what's the other one I want to talk about? Yeah, the price action and volume, right, coming into the zone is going to determine the exit. So if you're making the sideways call, you're not thinking this is going to be a zone fade for a reversal, right? You're not expecting a bigger move out of here. When would we expect a bigger move? Like, well, once this plays out, once you have such a huge move, expansion contraction, you're going sideways. But after that, you're once I think in the channel I posted this was what I noticed is that if we were spending time above, especially on this day, even before we got up here, above this moving average. And I said that was, the gap suction principle. We hit that. I mean, dog leash had snapped too. And eventually the dog leash is going to hit here, but there's going to be a story along the way. And this is going to be the real story. This is the head and shoulders, blah, 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 that they're talking about. And this is the real supply demand zone where we're going to see, okay, who's in charge here? Is there enough fear in the retail market of folks that bought here that this is going to sell this, break this back down? Or is this candle and this zone here, which brought us up? I mean, I'm expecting, right? This thing couldn't even get as far down to this supply and demand distribution. Now, granted, this one was bigger, so the bigger the sideways move, the bigger the move off of it. But also, this zone also couldn't even get as far down to that, and we still got this move up. So why can't we at least test somewhere near the, these all-time highs? I'm not saying if you're up in a lot of things, take some off here. I might do that in this microcap thing or whatever when Bitcoin gets, if it's having trouble breaking this 52 area here at this head and shoulders, that could come into that bearish pattern that they talk about. But it's like it's so hard for me to think about these bigger scenarios that they're trying to play, because it's like the system that I'm showing you guys here gives you a lot more chances. Our edge is in frequency, so it's like I really have a lot of mental distraction from that. It's more like a retail thing, investor crowd trying to figure out if this thing's going to break or not. I'm just knowing that this has good odds, especially now that this has got great odds to now, by the next day or two, by the to get up into here, into these zones. And what are these zones? And we'll also talk about the patterns in terms of the people behind them. A lot of folks that weren't buying here see this move now, and they saw how quickly it happened, right? Breaking this big picture trend. So now this intermediate term is a bullish breakout pattern. So now the short and intermediate term are aligned. So that means that every support zone gets more rate than every resistance. So I am going to make sideways up calls more than sideways or not calling, or sideways down. I almost made a sideways down call the day before on this one. But the problem was that we weren't at this zone yet. That was the big breaking launching point of directional conviction that broke us all the way down there. Visually, it stands out more than this swing high on this range balance. It's already been like constantly, But what happened was that I made a sideways call because we got up. I didn't trade on this day. It was really hard to trade. Really, there was no entry point. Came up here. No, the resting order has to be on trade location alone. We didn't quite get there, which is just showing you that we were just short-term exhausted. So we got snapped back down here. But the reason I didn't make a sideways down call is there actually a buying tail. There was no double top or triple to get in or whatever, and there was no trade location to lean on unless you were super aggressive and you had your zone on these tips here. Which fine, fair enough. I mean, if that's what you're thinking. But this trend, this intermediate bounce breakout, big picture pattern, and the short-term bias is so bullish that it's overriding any big picture relative to the day, because I'm looking at this pattern now. I know this is for day trading, right? This is the dominant trend for the resistance. This is the pattern on the bull side here, a bounce breakout pattern, big picture, because it stands out. Every other time it was small, we went down. Small, we went down. This time up near a major supply zone. We know after a major zone we can get. Honestly, you could have just had a resting order right at this VPOC. Let's see how good this was. Perfect. If your account was big enough, it just sucks because it's like you have to have you have to just layer these things in. But look at that automatic order. You just could have had that there. Perfect, And then what was the stop? It would be below the supply demand zone. even if you were day trading this on the day time frame and you got stopped out, you would get back. See, this is when you shift up and you don't take zone fades for reactions with that 2R absolute, which has a rule that says basically, um, if we go down really sharply on that range, that's even better on those sideways low volatility days because that's showing short-term exhaustion, not the sign of strength. But we want trade locations king on those days, so you want it to be as tight as possible, more towards the middle, toward the back of the zone. But when you're at a major zone, you're expecting a bigger reaction, like if we got down here. And if you got stopped out, you just get in there again. Even at higher, you take an even wider stop. So with the tradable reaction one, I take a 2R absolute stop. But with these bigger ones, right, what you want to do is just you get more aggressive. You can take a 2R, 3R, 4R stop because you're still going to get at least 2 to 1, way more than that, 3, 4 to 1. You might get 8, 9, 10R on some of these days. So, yeah, I mean, we didn't, and so this is another thing too. Once we broke above this VPOC, that was the value point of control. Everyone was saying, "Oh, blah blah blah, we're gonna get this Y double bottom, and then I'm gonna trade." Yeah, great. Like that's prediction thinking. It's really distracting, guys. It's really just not how to trade because it's like, yeah, if it gets down there, then I'll trade. But why would I consider that when there's this other pattern that I talked about? Well, maybe I didn't talk about it last time, but I'll do it again. And that's why I like the channel too, because like before I had the channel, I had a lot of sheets I would fill out, and then I would say, "Oh, I'm so sick of this," and then your mind plays tricks. Oh, did I really think about this Shamu pattern before it happened? And yeah, I did. It's really hard to get it, but there it is. So it's like you see that Shamu pattern, huge extreme, comes back up, hits it. That's the Shamu. It goes up because you're not expecting it to go back down because of this pattern, sham, sham, sham. And see, that's how it has to look when you see it. And the more the blue and the yellow are separated, the better. And that's what we saw. So as it slammed back down and broke a few days, really extreme, and it hit that VPOC, I mean, that's going to be a sideways call based on the Shamu. That's conservative. Let's see what happened. And I have to go back and check on the channel. I'm pretty sure. See, that was a sideways call. And then that was the confirmation signal for the next day to be sideways up. And that's exact. And boom, Shamu. And at that point, I think a lot of folks see. I go on the YouTube channel with the guys with the huge followings with their mouths open, and God, it's all based on prediction, accuracy. Is this going to happen? Man, see, the probability was in the Shamu pattern. Now, let's say I was wrong and it just sliced through the VPOC. Okay, that Shamu pattern that I bet on didn't work at that time, but over a sample size of 100, it does work out. That's how you have to think. Even as a day trader, we're thinking in the long run, which, well, about 100 trades, it would take you about 2 months. Well, maybe even less. It depends. So let's see. But yeah, see, it didn't happen, right? Now, on the sideways up call, could I predict that we were going to get a huge to there? But I do talk about the gap suction and the dog leash, and it's like, well, if you look at the beauty of the market around this price level, now that the Shamu pattern and we're here, there's a content. You look over here, yeah, there was a lot of, at this price level, a lot of, and what this shows me is that perhaps whales like to buy around this level. You know what I mean? And, hang on a sec. Just X that out. Quick Telegram. And that's basically one of the principles of the market, right? Is that previous market behavior influences future market behavior. Whales like to buy there. One is they have a lot of money, and they probably want to protect their position, and it makes sense. I mean, just it's a level that's attractive. It's quite a discount from the all-time highs, and it just shows you the aggressive nature of this. I kept talking about leg count, and it was tough. And I did kind of see that Shamu here I was talking about, and I came up here. Right, but this hadn't developed. It wasn't mature enough. See how this was extreme, mature enough, and it was near the supply-demand zone, and it was another leg down. So that Shamu pattern didn't happen that time. Right, it came up here. See the Shamu, and then I think what happened is that it didn't complete, which you want the Shamu to come up here and then break through. It came up here and then got initially rejected. Fine. When you see that level of rejection, a bearish engulfing pattern, that's when your head's up. Oh, okay. now the intermediate time frame could be kicking in again, and now we could be going down more, right? Because the bearish engulfing pattern is a candlestick pattern that basically engulfs the entire day, which is not what you'd expect if we are going to go a little bit sideways and then maybe break out. But that's fine. This needed more time to mature, and this leg was a swing that provided a pause for a week or two, a week or so. So it did provide tradable reaction, but it wasn't big enough really to take us all the way up, which is that's fine. Now with this Shamu, which was even way more extreme than this one, I have to bet on it again. And it took some guts because I went back before I bet on it in the channel, and I was like, man, last time I said that, it didn't happen. That's why I always say could, if, you just have to be humble. But I have to bet on the pattern psychologically, right? And it's like, that saying, like, if you keep doing the same things over and over again, expecting different, it's insane. But if you have a pattern in the system, that's what you have to do. But your mind's going to see something different and not want to bet on it. But I was like, even saw on the channel, I was like, well, this is even bigger. This is that. We didn't go down all the way. We went down. This is a bigger supply demand zone. I said, we're going to go sideways. That was the pause. And then sideways up. This would be, I don't know if I posted after today. I just assumed it would be congestion, but it was a sideways. We were at the resistance. Once we broke above it, it was sideways up. Then it was another sideways up. Then when we hit that, I almost made a sideways down, but I was like, okay, it's probably, I still want to be able to buy. So sideways is exactly what happened. It was a volatile sideways day, which is why Manu's indicator showed very high probability for a volatile event, anomalous event, volatility and volume. So it was a very sideways, high volume sideways day. Those are kind of hard because they're not pure sideways days. Like I talk about pure trend days. Basically, yeah, they'll basically chop you out. Like they'll take out both the morning and the afternoon high. Great. Bitcoin just popped. You know what I mean? So made a sideways call. I also made a sideways call today. I believe I made a sideways call today. And, this basically it's just the ebb and the flow. It just needs time, but maybe by the end of the day, it'll be sideways up. We'll close here and then I'll probably make a sideways up call. Or even if it closes really heavy, so I'll make an up call, right? If we close here and then by the end of the day, it's consolidating for like a double distribution day, I'll assume that we're going to have another leg up. And that's when I'll say you can get aggressive and gap suction up. However, if we go all the way up into the zone and we close, I'm not going to make an up call because it's at a stronger zone and I got to give respect. So my bias is going to be neutral and be sideways. So it's these little adjustments and that influences the stops. And then once you have this type of market reading down, can you in the heat of the moment, calm your nerves down and shoot with adrenaline? Because, a good analogy really is, like the sport of basketball. It's kind of a weird sport because like sometimes you got to like move, explode and get aggressive and you're in the post banging. And then other times you just got to like stop in the middle of it all and then like gracefully do like almost like a ballerina flip to the wrist and shoot. It's like, how do you stop your heart? That's why some guys can't shoot foul shots well because they can't slow it down. They can't flip their state. And some guys can. And that's kind of what trading is. And that's why you have to be really kind to yourself. That doesn't mean, so what I did is like, I basically got so kind to myself. So I have this mind programming that I do on a consistent basis. It should be every single day. And that's my goal, at least for this boot camp I'm in, which is now going to be 30 days straight. And, but what I did is that I stopped listening to that one. I started listening to ones about betting big and this and that. And then, I forgot the basic principles. Like, yeah, you're never supposed to abandon your risk controls. And, it happened. So it's like, it's like, what could have been a really great year on the portfolio. Then it was like, betting on those micro caps. But, then I say I have to forgive myself and go into gratitude. I'm like, wow, I got stuff I really got to work on. What am I really need to forgive? Like, what am I doing to sabotage? What was that? And you'd be surprised. It's like, give yourself with the journal, do some automatic writing, what'll come up and what kind of stuff you're storing in that'll come up emotionally. And it's like, almost like, like after your trade, it's like, if you're off your plan, like it's like something automatically moved your hand or something, that's when like, Corby and I would talk about breaking your state and just get up, jump, just go outside, like break your state. So there is this kind of like body mind connection with day trading because you are pressing the button in a flow state a lot. And, there could be this addiction to thinking trading is pressing the button. And, One guy I helped who's usually on the call, but he's not. I'm not going to say his name, but it's like sometimes he comes to me, he's like, I took 10 trades today. I'm like, well, how's that work? How's that working out for you? Was it really 10 opportunities today? So I guess what I'm trying to say is that just because you're at your computer doesn't mean you have to trade. That's one thing. So just coming to the computer and doing your routine. That's why now, after actually having a good conversation with a mentor of mine and a partner of mine back in the day, I said, yeah, now I know why we were really spending a lot of time on psychology. And you had all these sheets that I was filling out, and I've tweaked some things and fill out less sheets, but I'm going to start doing more analysis and filling out more sheets. Why? Because it's getting right right here at a major zone. I'm just calmer because I know we're at a major zone. Plus, we had this false breakout here, right? You say, what about this one? What about that one? Yeah, multiple legs down, bigger zone. I told you, I don't know. It's just a principle. But as we're now coming up into these supply demand distribution zones, I really got to be on my game because I have to see how we're going to manage risk. But what I see happening now is that now that we have time frame alignment, right? Because people say, well, I thought you said time frame alignment, Matt, was when the short, intermediate, and the big picture all align. I'm like, yeah, that's the best version of it, but often the short and intermediate can override, right, this dominant trend because we're not at a node in this dominant trend that's worth even really. I mean, look at this. We came up here, we smashed into it, and on first test, we didn't get a bearish engulfing pattern the next day. We like held right at it, and then we did this like sideways day, which is what I thought was going to happen, based on the fact that even this pattern is it's up 10,000 points, but that's because it's significant. It means we have time frame alignment. But I have to kind of balance myself with that. This is not the greatest support zone, but this could be slightly short term overextended, and that's the flow state of knowing in the next 24 hours it could be. This one was almost sideways up. I said, okay, just sideways. Be patient because often if I make a sideways up call, I can sometimes override. I went back and I was like, okay, I switched it to an up call. I shouldn't have done that in real time. And I just didn't want to do that because like there's no need to be this breakout trader at these, the real when you get aggressive is when everyone's like when the channel's quiet, when it's at these juicy look at this 33, I swear. For all the gematria, I knew it. 33035. And then we get this move off. So same thing. If you see if I duplicate this line here, we draw it here. It's the same trend line that we broke. So it's whether we break. See, when we came up here, right? It at least got to. I would say if I was looking at this would be sort of the basic range extreme. These were sort of the overshoots. Yeah, they spent a few days down here, but if we count up how many times this touched, this was sort of the range. Kind of extreme over that. Now, what do we have? Do we have anything comparable to that this time around? Well, this to me, this supply to demand zone is the more relevant one, and it's not as big as when we came up and dealt with this. Because a lot of people got freaked out here. A lot of people were buying at this point. Yeah, it's crazy. I do get phone calls when we are near the all-time highs, and folks say, "Should I start buying?" And it's like that energy is really contagious because it's like in no other, if this was a car, you would be like, the that Buick is 68 grand, man. I don't really want to buy it. I mean, I don't really want to buy it when it was at 30, and yet it still freaking happens, and it still happens on the day time frame too. I mean, the whole like buy low, sell high thing is what I'm basically doing as a day trader. Now that I'm specifically banned off all Binances now, as long as I still want to stay anonymous, I can't use their what do you call it? The futures exchange, which was very easy for me to do. It was just like go on the bot, switch the buy and sell price, and I'm shorting. Now with KuCoin, I'm just a long trader, which I prefer anyway. So I don't mind that. Just more patience, waiting for the good trade. And now that we're, in my opinion, the dominant time frames in line, I'm not really going to get neutral again. Like I'm larger time frame bullish until we get up into the supply demand zone, and you can see like that's why you don't really need moving averages because they're just derivatives of price, and it's actually showing you. Just draw it. Session of volume. Hang on a second. Fixed range. There we go. So this general area, right, top of the node. It's getting close to this. So that's the 200 moving average, by the way. So yeah, I think in the next couple of days, this whole area is going to get tested, and this is a good example of why price action and volume, especially when it's extreme in time frame analysis, will override any indicator. Because you notice how this was since this day here, which is around here, we've been making higher highs, right? But you see how this indicators been making lower lows, so there's a divergence there, which is like at least that was. I have enough experience to know. Okay, I'm going to slow down. That's like supporting the sideways days I made last today and the other day. But that doesn't mean like, oh, there's a divergence of price. I can't wait to short this zone. That's when someone gets that blue car syndrome, and they just want to try out something because they just now know that pattern. So you can see like major zones often act as magnets, and then you can expect major reactions off of them. We're already kind of above this one. We're creeping up. Yeah, everything's looking pretty healthy now. So if you're trading real time, like, so what do you say? How do you talk to yourself? Like, what's the self talk? Sometimes if your heart rate gets up so much, you're probably not even self aware of it. So what can you do in real time to improve your performance? Well, one thing you have to do is that if you're in that state where you're in accuracy based thinking, you're going to you're going to get into a trance, and you're going to get that little constriction over your heart, and then just snap out of it, observe yourself, and be like, oh, I'm in accuracy based thinking. I got to get out of here. That's that fear. Am I right? Am I wrong? Should I get in out of it? That's not trading. That's not trading. That's not the right state. That's your discipline from now on is not only risk controls stringent, which we talk about, 1.5% risk model fixed. It doesn't mean that you always take that. That's just, I would say, as you're starting out, that's the max you can do. When you get better, I would say 2%, because you want to try this out. Anything more than that, you're risking. That's why I tried out that Tika Tawari short-term trading stuff that if I upload this to YouTube, I wonder if because I mentioned Tika, they'll say something. But anyway, I'm not going to say it on this because I'm recording it. But it was a 7% loss, so it was trash. The first trade. I mean, it's just unprofessional. But you see how I'm very strict with that time frame. But simply put, uh, the fundamental stuff, I actually got sort of interested in it, and I diverted a lot of that to experts or some YouTube guy or some info I paid for, Brownstone this or whatever, Palm Beach. And those guys are so big picture bullish all the fucking time. And I'm thinking, yeah, because they got to sell their fucking shit. One, but they also are talking to all the right people, so they're like, yeah, fuck it, I'll wait a couple of years, so that that's how they're thinking. And I got kind of caught up with that. But ask yourself, like, man, how much more money could I have made if I could have just bought that same coin that mooned and just took some off to buy right now? You'd be doing a lot well off. And the thing is that, so forgive yourself right now. So that's why I said it. So forgive yourself right now in the moment with some belief for patterning, because like this is not, you're still going to have a lot more chances to do that on a big picture level. We're going to get to these levels again, and then there's going to be more all-time highs and more double tops and triple tops. And yeah, when you saw this up here and then this get rejected, this double top pattern, and if you were staking a lot of stuff like I was, no excuse for theta. I had 3 days. That's, I don't know. I just, whatever. Dot, though, 28 days. Yeah. I mean, what am I, but really what I should be doing is not getting greedy and just seeing it compound as it's going up and enjoying that, and just take it off. And that's why my brother called me up today. He said, have you unstaked your dot yet? I'm like, nope, I haven't. I had to find new validators because I realized that they were jibbing me. So I might do that tomorrow, because it's like 28 days from now. What's this going to look like? I don't know. Do we come up here, go down here? I hate when people do that, because go down, have a reaction here, hit these lows again. Now this will be broken resistance support. Have another problem up here. Finally break, hit this, hit up there. then we hit this, and I mean, what I don't know what if anyone knows what this Wyckoff pattern is, I should probably look it up. I just don't think about the markets that way, so I try to reduce and simplify the tools that I use because I guess as a day trader, I don't really need to know the Wyckoff, but maybe it would be helpful because I still have some resistance as a long term holder of this shit for some reason because it's like, oh, Pirate Coin, I love the project. Let me get a T-shirt and listen to the song and then hold it, watch, go all the way back down to less than $1. So maybe I need to add some of those bigger picture patterns for this investment stuff, or just say to myself, hey, how are you approaching your risk? Just take some off. How, if you're up here, realistically, I mean, how much more were you looking to get? I'm asking myself this. Let's just go back in time. Sometimes it's, there we go. So, euphoric state. I noticed like behaviorally, I start to create music around this time. I start to feel good. Pain in the body's going away. So long term, I'm like, oh, I'm going to keep holding. It's stupid, but I'm just done doing it. It's just not. It's not conducive from a risk reward perspective. Even before you saw all the bearish engulfing patterns that are very similar to this, and let's just say you were around here. Let's just bring it back a little bit. Who do we got Sean. What's up, Sean? Sean from the Bahamas, who is rolling in that central bank digital sand dollar.
But too bad I ain't got my hands on none of that. Yeah, I'm in another. I was in a stream and played a stream, and one of the guys just donated $1 million to one of the streamers.
Holy moly!
Oh, see, he's a whale. He bought into Bitcoin when it was at 10 cents, and he bought like $80,000 worth of Bitcoin.
Uh-huh.
Yeah, so he just gave away $1 million. It's crazy.
Someone donated to the creator of the channel?
Yeah.
Who's the creator?
This guy Farticus. He's a gamer, so he does like streaming and stuff.
Wow.
Yeah, so one of the other guys that actually joined.
Can you imagine, like, if someone in his past, this kid was like just some gamer, and someone told him, "You're never going to amount to nothing." He's like multi-millionaire.
But not just him. He gave 80,000 to another streamer that's in that stream and his wife.
Dang. Well.
Yep.
We're playing a game too. We're looking at lights on the screen and trying to bet.
Yep.
More fun. So what we were just talking about, just from a risk reward, is that it's like, how much more we think it can get. There was the 100K guys. I swear I'm done watching these guys for their analysis. Like their price predictions are ridiculous for our time frames, and we can make a lot of money if we just use basic TA. It's like maybe 76. So it's like from 60 to 76, it's like 16 or even 14 or whatever. And it's like, how much more, what's the risk were you willing to do? So you don't really want to, if we're day trading, right, we want to have a positive reward to risk. Here was your reward, and then your risk was watching it go potentially all the way down here. And fine, you were holding through some of this. You saw that. That's when people were calling me on this day. I'm not even kidding. And let's wait for it. Ooh, come on, what happened now? I wanted to show the bearish engulfing pattern, but yeah, at this point, everyone was seeing this same kind of thing again. If anyone was in hopium, I think it just didn't work out. So, and that was in, I believe, November 10th. So yeah, so basically we were doing time frame analysis, and we were just talking about how it can override maybe looking at one indicator and how that ties into psychology. Um, because Edgar said something about the other day in the channel, hey, such and such, I missed this, be kind to yourself. Right? I'm like, yeah, you have to, because like our definition of discipline right now is not only the risk controls, but it's actually to have peak performance all day, which is the hardest thing. That's why I'm doing a lot of that uh, mental work in the morning, that routine, and it starts off with just a little bit of meditation, like only about 10 minutes. That's the first step, is just about 10 to 12 minutes of meditation, just to check in. If I have more time, I could go longer, but 10 minutes will do it. So, and it's also basically, as traders, we have to know when, to get greedy and when to not, and, you know, when to increase our risk and when not to. So we were talking about, Sean, is that after we had a huge day like this, we're not expecting another huge day like that. So if we are taking trades, we'd expect a tight sideways day. We'd be taking zone fades for tradable reactions, which means in our head it's like we are, whatever we're betting. If we're betting 500 ticks, minimum criteria, it has to be in all out twice that. Which in this volatility environment, when the ranges have been of the last 14 days, about a little under 2,200, so you can expect more than that. But one of the criteria is that, let's say the ATR is around 2,000, and then you're expecting a sideways day, and then even better if it comes down sharply and it takes about, maybe, let's just make it simple. Um, it moves about at least 1,000, maybe 1,500 points in less than 12 hours. That's coming down pretty quickly in a short amount of time. So you have to think, like, is it really good odds for pure trend down conditions? Now, if we were trading the S&P 500, we'd have the privilege of saying, okay, let's check the market internals. Is this price action that I'm seeing, uh, corresponding with all the stocks underneath the index? That's like the beauty of trading an index, is that the price and what's really what all the stock. So it's like, if the price is going down, but then most of the market is not, looking at the internals, you have a positive divergence. You're like, well, I don't really trust this down price. That supports that sideways, I'm going to buy here thesis. But we don't have that here. So you just have to look at other things besides the internals, which is basically just being even more patient. That's why it took me a long time to actually get the ebb and flow of this, because the volatility is way more intense than the S&P, and we don't have the privilege of using those internals to check on sideways days. So you have to trust your principles more. That after pure trend days, you get really tight congestion, up or down usually. So the other thing we were talking about is that this was the bigger supply demand zone. This has been about a week. This is about a month. So it's probably going to magnetize to here, of which we are going to get a tradable reaction. That's when you're going to see more sideways down days. It'll probably form a congestion zone. But the question is, how it reacts here. If it forms a congestion zone, breaks up swiftly, then we're going to at least get 100% and come up and test this zone, and there's greater odds that we're going to actually make a test for the all-time highs again. But I don't know if it was Edgar or somebody in the channel was talking about the Wyckoff pattern. Do you know anything about that, Edgar? Or if anybody does, you can unmute. Or maybe it was Adam. But there's this idea that once we come up and test this right head and shoulders, yeah. So forget that pattern. That same Wyckoff pattern guy was talking about 8,000 when it was here, and then we missed this whole move. So it's like, that's why it's hard for me to get so wrapped up in it. I mean, just based on just basically volume distribution, supply demand zone, this area had the most transactions based on this volume. So you have a lot of people here that are going to make decisions about, should I hold this? Should I not? Should I not? They all bought here thinking it's going to go up. And so now I'm asking myself, is this whale candle, is that attractive enough to start this, at least now, the reversal of this big picture downtrend? And now we're going to have something that's going to go back up and test the highs. And you can only just take that day to day and looking at how price behaves at key reference areas. You see, this was a key reference area. That's why I had it in blue. When this came up here, closed, and the next day just went sideways. When it came back up here, shot back down, and then just closed here, that's a signal. Like, it's very strong. It's a really trash reaction for if you want to short that. It's weak. That was giving me the hint that this thing was going to go sideways at least. And, I'm not surprised we're creeping up. Now, look at this time in this context, still in this trend where we just had this breakout. Now we're coming up into this trend energy that had the breakout. And this was still a zone then because we had this touching here, this breakout bar right there. We had a bearish engulfing pattern that took out this whole day. Totally different reaction with this price structure coming into it. So, yeah, looking pretty healthy. Now, real quick. Oh, we got a question in the channel. He said no. Okay, he's talking about that Wyckoff. Now let's just take a look at what's going on in the rest of the market real quick. Oh yeah, Chris London was asking about how I did my support and resistance zones, but he's not here. It's all right. Let's take a look. So give it a sec here. Let's see what Ethereum's doing. Oh yeah, so one of the things that I've been using on my on the probability calculation scale you want to visualize, we definitely spent a lot of time just now on time frame analysis, how to identify bigger picture patterns or major zones. I actually did talk about the market internals, which is for the S&P, but we talked about price action, volume, but other markets like the other day, what gave me more confident to I think it was to go long was that Ethereum was already ahead. I think I wrote it in the channel. I said Ethereum. No, it was something like it was maybe a week ago. It was something like Bitcoin. At this point in time, possibly was already at its VPOC, and Ethereum wasn't. That showed to me a positive divergence. So Ethereum had relative strength, which gave me more confidence at that VPOC to go long. It was something like that. And sure enough, it's no, it wasn't at the VPOC as Bitcoin did. We have to go back in the channel, but the whole point is that the way to use it is like if you're looking at Ethereum and it's already leading a little bit, and you're leaning on the zone in Bitcoin, it's just giving you one more confirmation to go long. Now look at this. Look how strong Ethereum is, already breaking yesterday's high, right? And looking like it's going to hit this gap play, which would be the next logical zone. Eventually, probably, in the next couple of days, going to have a dog leash to this 200. Now, let's see what else we got. Why does this look all different to me? Oh, they just added these symbols. I guess I just renewed the subscription here. These don't look like upgrades. This looks like trash. Let's see here. Litecoin. Yep. They all kind of follow that same looking pattern. So what I think is going to happen is that a lot of the news-based psychology was adding to the FUD to this, so they could whatever, and the Federal Reserve is going to announce very modest, if at all, they'll just keep delaying it, so they'll become like I guess more dovish and less hawkish, and it'll be a fake out, and we might have a major major 2022, which doesn't mean we shouldn't take profits at anywhere near these highs or even at that head and shoulder in Bitcoin. At least take some off, because you're not going to go broke taking profits. And even if you take profits at the all-time highs or at that shoulder and then eventually breaks through and you're like, geez, I only have 25% in, I should have not listened to this risk management bullshit and help. I'm like, yeah, you might have been right that time. What if you just kept doing that on all the other times and you keep doing it going forward? You'll make more money overall. Now, there's also the principle that the more times you test the zone, the greater the odds that it's going to break. So it's like this is, testing the all-time highs again, assuming we break that head and shoulder. Now, is this Cadena? Where are they at? Yeah, take a look at Cadena because I know people own some of that here. Holy moly. Yeah, we're looking strong again. Lots of beauty here. Lots of similarity in price, beauty principle. Huge bounce breakout, but lots of strength. I mean, you could just tell that this is institutions buying, and this was the retail crowd selling. Look how small these candles are. And then just one capitulation candle here, and then these are just...
I have a question. When it comes to taking profits, what do you guys take profits into in terms of the reserves? Do you move money into USDC, UST? BUSD, what?
Unfortunately, Tether right now, which makes me kind of nervous. But also, I used to do TUSD.
Don't you have I thought you have one of those Litecoin cards, don't you?
Oh yeah, I do that.
Do their cards?
Yeah, I do that. I thought you meant like what stable coin do I use, but Litecoin's not really stable.
Okay.
But there is a stable coin card that I'm supposed to get. You just reminded me to do that MCO one or whatever.
Well, I haven't got any yet.
Yeah, you should. I mean,
I have to check and see.
You want to diversify, takes less money out of this, takes some less, money out of this banking system, puts it right in your hand.
Mm-hmm.
But yeah, like I was actually thinking about going down and just putting cash into Litecoin card, which you can do actually. If you have like physical cash, you can do it at Walmart. So I was like, this would be a good time to just do that without even doing it through the banking system. Because let's see what Litecoin's at right now. I'm sure it's low like all this crap. We should have been doing that last week.
Last time I checked, I tried applying for like the Binance card, the Litecoin card, and the Trineo card and the other cards, and it wasn't compatible due to, I guess, regulations in my country. But now we have FTX headquarters over here, so I don't know if that's changed. But somebody was telling me that I could just transfer crypto into FTX and I could just withdraw straight into my bank account. But I don't think I want to go that route.
Well, I don't know anything about FTX, but it was mentioned in that Brownstone report as an exchange, and I heard it mentioned on the news.
Yeah, that's an exchange. Yeah.
Yeah, so this is Litecoin. I mean, it's like making that V pattern, sideways dip go. It'll probably go V. It'll probably get magnetized to here. It'll probably have a V, and then it'll dip, and then it'll go up here. So yeah, I mean, like all these are looking good. Let's see how my shitcoin list is doing.
You got a whole shitcoin list.
Oh man.
Let me see what this list is to make sure I don't have anything from that list.
Truth be told, some of them are allegedly good coins, but call them shit coins. Yeah, here's LTO. Let's see. Yeah, I mean, it's at 25 cents. And Elon's targets were like, I don't know, $2 or something, $3 in the next 3-4 months. But he was shilling that shit at $2 to everybody when it was here. In principle, I'm teaching everyone not to buy on strength. And I'm feeling like, oh man, you missed another 20%, 18%. I'm like, oh shit, okay, I'll buy. I just been kind of crazy. Just trying to have a Merry Christmas. The market was like, nah, you're not having a Merry Christmas on that. You violated principle. So, but now this is when technically here Man, it dipped, real greedy, but 25 cents up to all-time highs. That's not a bad. You can get this one on KuCoin.
Yeah, I didn't buy into the LTO network.
I'm shilling it, Sean. Help me out. Buy it. It's amazing. This piece of digital data that I have no idea really how it works is amazing, Sean. Help it go up here. But
I'm gonna try because I have so much. I got so much airdrops and stuff from being in the Cosmos network. Like I got tons of airdrops, and some airdrops are still upcoming. So
is that you, Sean?
yeah, that's me.
Pirate Chain?
Yeah, I bought some Pirate Chain, and Pirate Chain was down to like 80 something cents.
There you go.
So yeah, I hopped back in. I was kind of hesitant to hop back in, but I was like, it's gonna go back up anyway. So that needs to go back up to like $16.
A hell of a day.
Yep. Yep.
Must be Raphael and
Yeah.
Jeff Gerwick buying again.
Probably right.
Let's see what else we got here. But this is all nice follow through. People taking some Bitcoin profits over to these shittier coins and going from there on out. Here's Rose. Now, this is another Elon pick. I did sell this one. I think me and BitShip were talking about it. She was talking about it when it was here. And I was like, yeah, in principle, sell there. Why not? And went down, and I think at this point, I didn't go back in. I swapped it for another one of his shit coins. This one. Right? And then it went up here, and I was like, oh, man. And still,
did you sell when it go up that high?
I know, because I didn't feel like going on the exchange, and it wasn't that much. But that just goes to show you, like, see this double top? Just like, it's an Elon coin smash. It's like when these other time frame swing trades or investment horizons, it's not my style. I mean, it's the same thing as day trading. It's just more shit to do. But let's see how this one's doing. Mana. This is another one that was mentioned in Brownstone Research that was going to do insane. I remember I was telling people on, I don't know if it was Fractal or it was the crypto, that other channel or whatever that some of you guys are on. Not Chart Picasso's, but that other guy.
Oh, that's Decentraland, right? Yeah,
Yeah, Blockchain Herbalist, and people are like, still, you want to go in? Still, it's at $2. I'm like, yeah, why not? It was like, I forget what it was, but so he thinks this one's going to go to like easy beyond 10, and
yeah, I bought some. I bought some on the Polygon network.
Yep. So yeah, same thing. Like we're up at this high volume node here, which is a major resistance zone, spanning huge amounts of time, and we're having these mediocre day trading. The nothing major, not like taking out this day, this because this intermediate term trend is dominant. These are bigger players now, and people see those moves and they get excited. And then that will this attract more retail crowd to break this resistance zone than the retail crowd that wants to sell here that got smashed? And however that plays out, that's that accuracy based thing. I don't know. I just know that at this area on first test, this zone would provide like sideways days, sideways down days. Sideways days because it would give you an opportunity to buy as it's coming into the dominant trend. But as you can see on the first test, it took out this, but still mediocre relative to this strength. So it's same pattern on Bitcoin. Hits a major resistance zone and barely did anything. Now let's see some other shit coins. This is a privacy coin. It's got good use. Sorry to use that term, but God, from a price perspective, it does look like shit if you bought if you bought higher. But same thing, you know, we broke out of a giant balance. It's not the same thing at all. It's a completely different context. Sorry about that. Same thing as we're coming back up into, I would say, you know, a major resistance zone, but not having a huge reaction because same thing, just a little sideways day, sideways down day, doesn't even take out yesterday's lows, snap back up. Yeah, I'm going to be sideways, touched right there. So another thing, a whale. I think just these are just whales. Some big people are buying. They're starting the trend at the bottom like they always do, and make no mistake about it. They see these key reference areas and they can just push it there to just snap everyone out. Then everyone is buying, you know, to get back. All the short sellers that are buying to get out of their position are adding to it. So they know how to play those supply demand walls because these market manipulators are the ones that create it, and then the professionals are seeing it. They're going with the whales. And the retail crowd